Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, February 14th, about 15 minutes before the markets close. Before we get started, please know that all of us at ToniTurner.com wish you and yours a very happy Valentine's Day. And now, on with the market. Wall Street's main indexes are happy but relatively quiet today, though set for firm weekly advances as Treasury yields continued to decline. A day after U.S. President Donald Trump unveiled his reciprocal tariff plans but stopped short of imposing new ones. Yields across government bonds slipped for a second straight day after data showed U.S. retail sales fell more than expected in January, dropping 0.9% last month after an upwardly revised 0.7% increase in December. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Today, just a few minutes before the close, the SPY was trading at $609.68. I mean, we're talking close here. That was right at its recent all-time closing high back here on January 23rd at $609.75. So we're right there. We know that since the SPY has gone along, walking up its 20-day moving average. That's the red line you see on this chart. The 20-day moving average, the SPY has been walking up its 20-day moving average actually for most of the time, or much of the time, since November 2023. And we know that if we follow this recent chart, of course, the hard right edge, or hard left edge here is September 2024. If we watch the SPY walk right up its, for the most part, except we had a little dip in October, walked up its 20-day moving average, and then we know that it made a new all-time closing high right here on December 6th, and that was at $607.81. So that was a pretty good all-time closing high. It took place on December 6th. Then the fun started. Then it broke down below dove below the 20-day, that's the red line here, dove below the 20-day on December 18th, and that had to do with comments about the Fed and interest rates. It dove below that on December 18th down to $585.89. It held there for one day, then gapped down on December 20th down here to $580.91. Then it rallied, as you can see, right back up to the 20-day moving average. And as we say in trading, what was support becomes resistance. So the 20-day had acted as support for a long time, for much of it. Then price dove below it. So that was support. Then price dove below it. Then it became potential resistance, and indeed it was. So it rallied back up to the 20-day, up to $601.34 right here. Couldn't get over it. Then fell back down to the 50-day, to the January low down here of, let me see where I've got this here, down to the January 2nd low at 580. Then it held there. It held potential price support here. I was looking at this low, and I was like, when it came down here, I thought, oh, please, please, please stay at or above that. And it managed to do so. Then it rallied up to $600, couldn't get over the 20-day again, then fell to the January 13th low down here at $575.35. Excuse me. And then it rallied from there, moved up above the 20-day, by now was in inverse to the 50-day, up through the 50-day, the green line, 50-day moving average, and rallied nicely to what we're going to call today our present all-time closing high, because it may still be in force here. at $609.75, then fell to the 50-day moving average, and you can see it, but it closed above it. It fell below it, but it closed above it. And then we were trying to make out this pattern here and what it really meant. It fell below it again real quick, but managed to close at least up at it. So we've been looking at this price pattern and seeing what is this anyway. And now I can see that it has become, if not the most orderly one we want, it has become a consolidation more or less along the 50-day moving average. We had talked for the last couple of weeks about the difference between the price pattern that we're looking at now and the price pattern that we looked at for much of the time earlier in 2024. If you look at the far left here, look left with me, you can see how price was, except for a couple of hiccups here, it was pretty much doing a very nice orderly walk along the 20-day, and the candles were relatively close together, and they were not huge. I mean, they were not real tall, like gap down, gap up. And that means that everything was pretty copacetic here. But then when we got into December, you can see here that the whole attitude changed, and it was crash, bump up, bump your head, come back down, stay steady, break out again, go sideways. And at least we have here is kind of a consolidation, so along the 50-day moving average. So we can now at least get some support and resistance lines here, levels I should say. So we, hold on here, I'm looking at, we have, I'm going to call resistance here staying at 610, okay? It's right here. If we go back here earlier, of course, it's 609, but I'm going to call 610 as the possible resistance here. We've got the 20-day moving average coming in at $604. We've got the 50-day moving average coming in at $599. Those are potential price supports here, nearby supports for sure. We have 590, we have 510 and 511 here. Then we have down to 590, a little lower down here to 580, 581 along here, down to the January low at 575, and we have the October low even down here at 468, and we have pretty much coming in close enough to it, the 200-day moving average, the black line, coming in at 566. So plenty of potential support here should we need it next week. In the coming week, it's going to be pretty interesting. I think we will see whether indeed the SPY can break out. Can it break out to new highs and continue this prior uptrend after we see if all of this indecision here can turn into an uptrend again, or is it going to need a little more time to take a rest? So as always, please trade carefully. Please keep an eye on your protective stops. And as I said last week, remember, cash is a position too. Once in a while, I say, I think I'll stay on the sidelines. Doesn't mean things are good or bad, just means I feel better that way. So patience is a wonderful thing to have in this business sometimes. So be careful. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this ETF is a daily chart that follows the NASDAQ 100. The NASDAQ 100 is composed of the top 100 non-financial stocks in the NASDAQ stock market, including, of course, the large cap momentum stocks like NVIDIA, Meta, Alphabet, Tesla, that group. So today, about 15 minutes before the close, the QQQ was trading at $537.89, right near the all-time closing high from December 16th at $538.17. So we're right there. We know that since this August low back here at $423.45, and everybody had an August low, it seems like, The Qs have been, they rallied from there, then walked up the 20-day moving average, just like the SPY for the most part, except for that little one dip, and walked up the 20-day moving average all the way up to, again, the recent highs at right around 538. Then had this day, just like the SPY did, it had to do again with comments about the Fed and interest rates. So on this day, it fell hard, and it fell down to the 50-day moving average here within 3 days, down to 509. Then rallied up, made it back up through the 20-day, not for long, for a couple of days, and then rallied back up here to 531. Then down to the 50-day moving average again. I was holding my breath. Intraday, it went down to 506, but it pretty much stayed above the 50-day. Then it rallied again, couldn't stay above the 20-day moving average, and fell down to the January low here, down to $499.70. So let's just make it easy and call it 500. Then it rallied up to 533. So it's been up to 533, back up through the moving averages, then dropped down below the 50-day to 510. Then a rally and another drop here, back down to about 510. And then it started squirming around, walking up, doing its best to walk along the 50-day and 20-day moving averages, again up to where it is today. When I captured this chart a few minutes before the close at $537.89. Now last week we drew a triangle like that, and we drew it like that, and we know that triangles typically break up or break down. Now, so far, this is positive news. In the last couple of days, the triangle is really breaking out. We still have to deal with this overhead resistance here at 538. I don't think this, I'm not sure, I don't think the Qs broke above this today. We'll be breaking above it at the close, but it's close enough to see. So we've got near the highs here at 538. We have potential support here, price moving average support at the 20-day at 526, and the 50-day down here at 522 and change. So that's all pretty tight there. Then we can move down here to 510, 511. For more potential support. Then we've got the January low down here at 500. Round numbers sometimes help. And then we have the 200-day coming in here at $487.77. We have the October lows coming in at 484. So all in all, should the Qs need it, they've got a lot of, just like the SPY, they have a lot of potential support here, should they need to see some of this in the next few weeks. So again, it's going to be very interesting to see what happens next week, whether the market can, the SPY and the Qs included, whether they can break out here to new highs, or whether, as we say sometimes, the market has to broaden, meaning kind of move sideways and rumble around within maybe kind of a range like that to get some more buyers rev back up again. So it'll be interesting to see. Again, please keep an eye on your protective stops and trade carefully. Our final chart today is one that I don't know if we've ever traded before or ever looked at before. I look at it, but I don't think I've ever talked to you all about it before. This is a daily chart of the iShares MSI Emerging Markets ETF, symbol EEM. Now, some of the top holdings in this are Taiwan Semiconductor, Tencent Holdings, Alibaba, Samsung, and the fund has most of the stocks in the fund hold exposure to China, Taiwan, and India. Kind of interesting now to see what's going on with China, and certainly Taiwan. Semiconductor has been mentioned today in relationship to Intel. I looked at a bunch of different charts here, and I kind of like what I see. I looked at a longer-term chart of the EEM. You can't see it on this screen. I always look at a monthly chart. And so just know that the EEM made an all-time high in February of 2021 at $58.29. Then it fell to an October 22 low at $33.48. So it kind of made a complete cycle there if you look at a longer term chart. And then it started higher after that October 2022 low at 33 and change. On this chart, you can see that the EEM made a high in September at $47.44, and then gradually fell down here, did a downtrend, a stair step, not too volatile, but certainly down, lower highs and lower lows, all the way down to this January low at $40.61. So when it came down here, I've been watching it, and I see here as a trader, I see a potential inverse head and shoulders here. Okay, and then this down and like this, and then up here, so it's an inverse head and shoulders, which can be a bottom reversal pattern. As you all probably know, the shoulder line is being drawn here pretty neatly by the 200-day moving average. And for this pattern, we usually wait for price to, if it does, to break above, to look for a decent entry point to break above the shoulder line here. And it has broken above that right now, not by a lot, but it has. So it's broken out over these moving averages. The moving averages were inverse here. The 20 days and the 50-day are both below the 200. The 20 days coming in at $43 and the 50 days coming in at $42.79. 20-day is rising now. The 200-day is coming in here at $43.29. So what I'm looking at here, and not to go in overly heavy, but just something to it's not a day trading ETF by any stretch, but something you may want to, because it doesn't follow our stock market, so it's kind of another place to keep an eye on. If in the coming week the EEM can stay above its 200-day moving average, and again that's coming in at $43.29, I may buy a small position of the EEM in my trading portfolio. And I'm going to put in a stop down here, hard stop down here at $42.50. I'm not going to give it a lot of room. It looks like it's got some go power here, but in case it doesn't, I'm not going to give it any room. So my stop is going to be down here below the 50-day. Again, that's coming in at $42.79. I'm going to put a stop below the 50-day at $42.50. If and when the EEM can come up here and close above, if I can draw a straight line, the $45, if it can close above 45, I will add to my position, and by then my stop will be a trailing stop. So you may want to keep an eye on the EEM in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. How to swing trade successfully, and that's right here, How to Swing Trade Successfully is one of our most popular programs, and for a very good reason. It can earn you profits in almost any market, and everybody likes that. Swing trades, for those of you who don't know, swing trades have a time frame of roughly, not exactly, but roughly 3 to 5 to 7 days, okay? So what you're doing is you're looking at an uptrend. When it breaks out, you're only in for the period of time that the upswing is going up. You know, uptrends are a series of higher lows and higher highs. You just want to be in get the center out of the Oreo, as I like to say it. And you'll learn in this program how to trade my powerful Sleeping Tiger setup. I've taught it to thousands of traders. I use it myself still almost every day. So again, in this program, you will discover exactly where and when to enter your trades and how to take the best profits from price upswings. Our new low price for this program is only $187. You should make that back pretty quickly. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 Steps to Successful Trading, great program for traders, down to what we're talking about today, how to swing trade successfully, how to trade the trend to profits, how to read charts, 3 winning setups, great for short-term traders. One of my favorites, how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check out these programs by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.